Good morning. Welcome to OptionsTender. Welcome, traders. It is Thursday, January 30th, 2025. Okay, we're going to go through a lot of things, a little bit of maintenance. It looked like trade was going to start to happen today, maybe a breakout to the upside, but price fell back down into yesterday's range. So I doubt anything's really going to happen for the rest of the day here. Besides chop, going into tomorrow's PCE data, the inflation data in the morning, and also Apple's earnings coming out tonight. So we're getting through the week, tons of catalysts, and let's see how this resolves. You know, things are kind of, I want to say, playing against each other in a sense where, you know, if one individual name is up really high, big tech, and the other is dropping, you know, the market's right in between kind of thing. So nothing's really happening, getting some volatility from FOMC in a smaller range, and prices going up and down in there. So hopefully you're not getting chopped up with that, but this is going to resolve pretty soon. And I think tomorrow would be a good day for that to happen. If not, we're probably going to have some sort of, you know, inside week or so. We'll see how it finishes. But do be ready that the market can move big either direction. And really, we're kind of getting a triple inside day or double inside day here. So, all right, so let's check this out. We're going to start off with SPX, and then we'll go down to SPY on multiple time frames and go around the horn on the daily time frame so you can get a big picture of where these indices are and why I'm leaning bearish. All right, no big surprise, huh? Well, we're topping out for all of you who are new here. 1929, 2000, and 2025. Okay, we're at these tops. This confluence also with the trend line from 2008, 21, and now. Okay. So that's why we're trying to play this. It's a choppy top action, and this is going to resolve. And when it does, it's going to be incredible. All right. So we're doing this intraday about 11:49 Eastern Standard Time, a.m. Eastern Standard Time. If you are interested in getting this video intraday, or these videos intraday, consider becoming a YouTube member. We've had a huge inflow of members into the Discord. It's 99 cents a month and comes with the Discord, trade alerts, all those things. And you get to bounce your ideas off of all sorts of other traders in here. And it's really cool. So appreciate all y'all that are in there having a good time. Let's do this. Okay, we have SPX on the monthly time frame. You saw everything there in the big picture that I'll post up above or beyond or at the end of the video. You'll see what I'm looking at, and I'll talk you through all of these retracements here. But so far, sort of an not engulfing totally because we're not making a new high here, but sort of engulfing monthly candle. So we'll see how this ends. We have one more day left in the month. Let's go to the weekly. We're going to stay on SPX on the weekly, and then we'll go to the SPY on the daily. Again, we're up at those trend lines there. Still a red candle. This is possibly a reversal candle with this red candle here. And we're getting a lower high, pushing off of that 8 EMA. And we should see, if we do get a bear sell-off tomorrow, let's see if we can get to this 20 moving average on the weekly. But just keep an eye on this weekly candle. This could end up being a wick. All right, that would be about 100, a little less than 100-point move if we, a little more than 100-point move if we get down to the weekly and the trend line here, the 20-week moving average. That's going to be a super big indicator. If we get back underneath the 20 and come up and kiss it, they call it the kiss of death, and price falls from that point. So we have, I better go over to SPY. I was going to just do it on the daily, but we have our time and price on on SPY here. Okay, so we have our time and price cluster here at the beginning to the middle of February. So let's see where price is when that comes about. And we're talking 2.3 to 2.17. And each of these lines here, they represent a week, all right? So it's not like the day of, it's the week of February 3rd, the week of February 17th, that we're looking for something to happen in a cluster. So if we're higher in price, then we're looking for a reversal. Clearly, we'll have negative divergence and things like that. If we are much lower, or if we're lower in price, then we'll look for a bounce at that point. Now let's go down to the daily. Daily trend is our friend. We have the bottom of this wedge. Okay, we have this bearish rising wedge, huge wedge. It expanded over time. The wedge was smaller, then after a correction, it expanded. Since we got a new high, you expand the wedge, okay? And then we formed a wedge within, right there. So fell out of it, got a new high here. So that in that case, you would actually move this trend line down here, which matches the trend line that's already there, okay? So this is gonna be a big trend line. If we go back to test that, and if and when, should say when we go back and test that, be a big area to hold on to, and that would be the decision point for a higher low, okay, or a breakdown for a bearish move. All right, and I just have some examples here. I have this lined up there. I guess I'll move them out of the way since we're trying to get a visual. But just know that you see how steep they are, and they're examples, but you can look at that in the video for the big picture. And so right here is just this consolidation area. I think it's a bear flag, and I think we drop from here going into tomorrow, or at least into next week. All right, time and price, Fibonacci's. I started adding my time ratios here, so we have a new top in right there, so those should coincide with all these clusters that we have. But our next cluster here is in the beginning of February, which is no coincidence. That's going to line right up with the weekly. So let's see where price is when we get into February. It looks like February 5th and 6th for that cluster. I love it when things line up that way. Now let's go around. We could, I know that some people want to see ES. ES will look like, we have seen these GAN lines here. This isn't my work, so we're not going to work on this. We're not going to focus on how they got there and whatnot. So it looks to me that this was a good initial move, and this looks very bear flaggish, but this can always go up to the upside. There's still a gap open right here. So we're rejecting off the gap so far. Eventually that's going to have to get filled, but it could take months. Usually it's pretty quick, but it could take months if we do reject from this point. And you see we have some resistance up there as well. SPX. There's a little bit cleaner chart. You can see that's 2008 in turquoise and the 1929 in the purple. And we got up to that point, rejected off of it hard. So even if we go back to test up here, it's not going to be an easy spot. If price gets above here and holds on to these trend lines, then there's not much choice to be bullish in a sense. I know that there's going to be more divergences, but you're going to have to let these waves play out. So this would at least be a new wave 1. If we have a wave 5 here, this could be an extension for wave 1, a wave 2 that could be done here, or you get one more leg down. So this could be a 1, 2, 3, 4, and 5 up here. Okay, that could lead us up to 63, 6,400, even 6,500 if that was the case. But I remain bearish underneath these trend lines here, historic trend lines. Now you see the price action, we're in all of this range here still, and when that plays out, it's going to be a pretty big move. Let's go to Qs. Now with QQQ, we're still looking at this as a bull flag, but you're going to see some people will draw this out as some sort of equilibrium, and nothing wrong with that. It's just traditional technical analysis is just visually allowing yourself to trade the market. Okay, and you can see that price is tightening up in this range, so you can look at it like this, and when it breaks out of this range, it's likely to resolve in a trend. All right, so this is a bear flag in my opinion. We'll look at that on the 65 as well. There's a gap, large gap from a trend line up there as well. Let's go back to SPY. I want to show you another way of looking at. So we were looking at this as a bull flag, broke out, back test, and that's great. Now some people are looking at it's expanding, right? So you have the Qs contracting, and you have SPY expanding. So that's one way to look at it as well. And this will resolve, whether that's the upside or the downside. And if we go to test up here again, you know you're at the wedge top once again. So you have to get above there and start trading higher at that point. SMH. Now here's where you start to look at the other indices and say, wait a minute, maybe we're at a top again. Maybe that is a bear flag. So I think we're bear flagging here as well. We're up against the 200 moving average. Once again, we gap down underneath. We're back testing it. We're also back testing this trend line from all the way back here in 2022, the lows. And then you have this bear flag that broke down and back tested. This has to get back above into these moving averages, has to, maybe with the PCE and Apple, if you want to be bullish at all, you have to get above this level. We're right up against it. All right, and you also had this pattern that was an ending expanding diagonal there. All right, and so that resolved, broke down, and like I said, just a huge breakdown with whatever news. It doesn't really matter. The DeepSeek and the charts already knew what was happening. You just have to put a label on it. Okay, so I think this is going to resolve to the downside. All right, what about the small caps? Where are the small caps at? Well, it's still holding on to this trend line, but we're back into the 50 moving average, and that's a big zone. So there is a level above here that will act as good resistance if we get there. This is a 50%, and so we're clearly having trouble there with the 50 moving average. But if price gets above here, then the 62 is going to act as a really good resistance as well. So that's at 233. And that coincides with this here. That resistance as well. That's no coincidence. DIA. Well, would you look at that? We have this channel here. We're back testing the channel, just holding against it, waiting for, clearly this is holding the market up, helping hold the market up. We're into resistance with big data coming up. And the data doesn't have to play out tomorrow. It's likely to with that catalyst and Apple. But, maybe this is going to be some sort of narrow ranged, not real narrow, but we looked at the weekly and just, close as is, and maybe with even a doji, and then we have our move next week. That's always possible. VIX. VIX is just back testing this trend line here. We're underneath the 200, so that's not that's not bullish, but if we get back above it, it will. So we did not get our reversal here. We got our continuation. Backtesting here so far, a higher low, higher low, higher low. So at this point, we're still making higher highs and higher lows. Okay. Looks like maybe it wants to come close the gap here. That's possible. And then we can work into a new cycle there as well. And I think that we'll get new highs after that. So that's what I got for you guys on the 65. On the 65, this was a wedge, broke out of it, and then broke down. So this is expanding a wedge at this point. And we'll call it a channel, really. And so that's probably getting some... Oh, yeah, we were at support, too. And we're oversold. We're into support at there, 1550. That's not a new line. That's been there. So this could go lower, but we're at support now, going into big data tomorrow. And you can see the support on the daily time frame. Again, this is not one that we drew anytime recently. It's there for a reason. So bring that out. We're at support. Now let's go to spying the Qs on 65, and we'll end it there. Okay, 65-minute traditional look. There's a closer look there. Made new all-time highs, broke down, and now we have an expanding wedge here. This is a bear flag. Where we rejected was we had an island gap here. This was an island gap. We closed that gap, so had a reaction off of that. But it's no coincidence that we're at the 62% retracement of this potential wave one. So we talked about this yesterday, where this ABC could have expanded. Okay, and in all the other indices, we're going to mimic that situation. So I'll go through SMH as well, because those were ones that we're looking at. So we'll be quick about this. And then we have some time and price coming in tomorrow as well. All right, and then here's our target. We have to raise that up because price got a little bit higher. So if this is a 1-2, we'll be looking for the wave 3 to come all the way down here to about 580. And then if we're looking for an ABC correction, then we'll be looking at that 100%. We'll be looking at about 588, 590 zone, which is a back test of this flag. All right. So we're still in play of this move here. And you can set your stops here at the 62% retracement or this high. But, price could still get up to the 786 and it'd still be a healthy pullback, and we'd close the gap or at least come close to it. But I think this move has resolved. Oh, man. Of course, I'm going to give you whiplash here. And I didn't show you that today, with this move higher right here, that brought us negative divergence. All right. And we're not oversold or anything, but we'll see what happens with that. All right, Qs. And so what we talked about yesterday, see that we have a bear flag there, more of a traditional look, bear flag. And what we talked about yesterday was this was a wedge in itself. We broke down and made a new high. All right, that's what we talked about happening yesterday. And again, rejected off the 62% retracement. All right, so this is likely, in my opinion, likely that wave 2 is in. And then we have a retracement that we can adjust now, or an extension. And this would be the wave 3, likely to come down here to about 488. And just to reiterate what we talked about yesterday, because we knew that we had trend lines and stuff above. So you can go back and look at that if you want to. And we talked about this possibly just being a larger A. Instead of this being an A, B, C and being done, this was an A, B, C up here and likely complete. If price wants to go a little bit higher, there's some room to wiggle, but we know that we're at the 200 moving average and we have this gap here, and the island gap is still open from the news catalyst. So we're fighting with the gap right now. All right, that's what I got for you guys. Hope this all helps. Don't forget to like and subscribe. Thank you for all the support and the momentum in getting this channel out there and trying to help people trade. I know that we have, I want to just talk about the thumbnails. Well, I don't put thumbnails on anymore, but the titles. I think that we're heading lower. And so I use the verbiage stock market crash. And if you don't like that, I'm so sorry. But if you actually watch the video, then you get the knowledge of what we're looking at and how we're trying to trade it. Okay. And then if we're rallying, which we will eventually one day, if I'm looking for more than just a bounce, a rally, then I'll put stock market rally on there. And that's just all for headlines. Okay. So that's it. Thanks for joining us here at OptionsTender. Have a wonderful day. We'll talk to you tomorrow.